Good morning or good day, wherever you are. It's Monday, 21st of January 2019. Welcome to our global series, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side that will be answered in our webinar. Our goal is quick and smart, like every day. So let's have a nice start, like every day. And we will start like every day with our risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. If you are a starter, please start with a demo account to make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our regional web pages, for example, admiralmarkets.com, and you will find the long version of the risk disclaimer there. If you are in the European Union, you still like to read more about the topic of the year 2018 and maybe still topic of the year 2019, the different offers and options for retail clients or professional clients due to the ESMA regulation. Also, there you will find information on our web pages. Or here, a picture shows more than 1,000 words. The margin requirements could be quite different. DAX 30 and Eurodollar examples. If you are a professional trader and you like to get the professional client status, you can apply for that online if you are eligible. Here you see the specific link. Retail clients still have a big benefit by regulation. It's called unlimited protection against negative balances, what is not given by regulation for professional clients. But some brokers and of course also Admiral Markets offer something additional. It's called negative balance protection policy. Via that policy, you are protected up to 50,000 British pounds, what is round about 70,000 euro. Check it out with all details on this specific link, what you see right now. This is me. My name is Jens. I'm the German guy from Admiral Markets, so my English made in Germany. We are a big international Forex and CFD broker with over 18 country offices, but I'm not the main speaker. The main speaker is the day trader of today. Usually on Monday at Jay's day. Jay is unavailable today, so we have a substitute. It's Jens Klatt. He will take part in a couple of seconds. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. Thursday, it's Marco's day. On Friday, it's Dirk's day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. DAX 30, triple spread, just 0.8 points. Eurodollar, 0.6 pips typical. Check all the details out on admiralmarkets.com. There you'll find also information about One World global offers. Yes, we have an office in Chile. Yes, we have offices in the European Union. And yes, we have an office in Australia. Check it out. Yes, the choice is yours. Everything to find online if you'd like to read more about it. Enough from my side. Now it's time for Jens Klatt. Good morning. Good day. What's your view to the markets today?
And good morning also from my end. 1 second, let me just share the screen. So this is the face to the voice you're currently listening to. Let's switch over right here to the markets and the market I'm currently looking at. It's as usual EURJPY. I want to give you some idea on how I trade EURJPY today on a setup which is in fact not oriented on the expected volatility, but based on pure statistic, in fact, over a quite long time span. Why do I say that? Today is an interesting day. Yeah, it's not really an interesting day, to be honest. In fact, it's a special day. Today it's Martin Luther King Day in the US, and that's the reason why there is different trading hours now. I just want to have a look here in the where do we have it? In the news tab, or is it in the journal? No, I think it's in the news tab probably. No, or here in the mailbox. I'm sorry, trading hour schedule for January. So this is it. So in fact, here you can see that there is different trading hours now. Today, you will find this information in your MetaTrader, going to the mailbox in this case, and then click on the trading hour schedule for January 2019. You can see that there is no adaptation for the Forex market, but also there's no adaptation, for example, for the DAX 30. This is the second main asset I'm trading. And so, in fact, Martin Luther King Day does not really affect my trading. It only affects, in fact, U.S. markets, U.S. equity markets, but also gold, for example, as you can see here, soft commodities and all this. So for an update on the different trading hours you face today here, as I said, just check out the trading hour schedule for January in your MetaTrader. So to me, in fact, it's not relevant. Nevertheless, it's relevant that I know that due to this day today, the overall volatility should be expected to be, let's say, subdued. So I don't see big moves happening, even though I'm kind of surprised when looking at the DAX right now, who lost around nearly 100 points from the highs it made on Friday. What we want to do in the upcoming minutes is I want to give you an idea on how I see the reason for this price move, which happened there on Friday. And also what to expect then for the next days to come. Not necessarily today, but probably in the days to come also with or in regards to the ECB rate decision, which will take place on Thursday then. But before, let's have a look here at the setup and I'll give you an idea why is it a buy stop. In fact, I just changed it while Jens made the introduction. I had to change the sell stop order, which we initially placed, in fact, and now it's a buy stop order, and it's in relation to this purple moving average here. As you can see, that's the EMA 11. It's an exponential moving average 11, aggregation 11, and it says if we're trading above that, we only trade breaks on the upside. If we trade below that, we only trade breaks on the short side. And then you ask which breaks I'm talking about. I'm talking about breaks of this range, which I'll define between 3 a.m. till 10 a.m. German time. So a CET in this case. And that means in the moment, the market, and this is special for today, so we have to really zoom into the chart so that you can see why a short order was initially placed. As you can see here, this is the candle, in German 9 a.m. candle. So in this case here, this is Estonian time, Cypriotic time also. It's the 10 a.m. candle, but it's the 9 a.m. candle here. And when it closes, the question is, where do we trade or where do we close in relation to this purple line? And as you can see, if you really zoom in, you can see that we closed slightly below the EMA 11. That's the reason why we initially placed the sell stop order. And now you wonder, okay, why did we switch from sell stop to buy stop then? Because now we look at the last candle and the close of the candle, and we weren't triggered here on the short side. So as you can see, it was a close one, but nevertheless, we didn't get triggered. And then we closed slightly above the EMA 11. And now we had to switch the order from sell to buy stop. And so let me just here show you the parameters for both sides probably. Based on the range, I prepared it already here, and let's go here, and then I'll increase it, I enlarge it to probably a size where everyone can see what I'm talking about now. So we're talking about this range. So this is the low, this is the high of the range between 3 to 10 a.m. German time. And in case of the long order, as placed right now, the entry long is 124.825. So I'm buying a break above the high here in this case. The stop then is placed at the low of this range, which is 124.58. That's 24.5 pips risk. And the target can then be found at 125.245. So a chance of 42 pips, and the risk reward, and this is where the statistic comes into play, the risk reward is not based on technicals or something, so technical relevance of certain levels or something, Fibonacci's or pivots or something like that, former weekly highs, lows, but it's based on pure statistics here in this case. So I multiply the risk with 1.7, and then I get out at 42 pips, and I just add this here on my entry long on the upside. And this is how the setup is defined then. For entry short, so from the setup, we switched over to this one here. So let me probably make this red. So the red one is the one which is currently active, and the order which we find in the market. And the black one is the one which I had till 10:59 German time then in this case, and which was switched to the long side. And the setup is given through the fact that we then trade the break out of this range here on the downside, 124.58. the stop is then placed where currently the entry long order is placed at the high of the range, 124.825. The same risk, obviously, because the range didn't change here. It's 24.5, and then the target is found by multiplying 24.7 with 1.7. It's also 42 pips, and then we subtract those 42 here from 124.58, and then we get out at 124.16, and resulting in the same risk reward of 1 to 1.7. Yeah, and so this is the setup for today. Let's see if it's triggered. So it's not often that the setup's not triggered. In fact, usually you have a trade per day, one trade per day. But there are times, as today, with low volatility, where breakouts sometimes do not happen. And if the breakout does not happen, our order is not triggered, so we don't have a trade for today. Yeah, and so in fact that's it on the EURJPY front here. And now it's it's time to be patient and see whether the setup is triggered or not. But let's have a look at the developments in the DAX as promised. So first, let's have a look here in the daily chart. So as you can see, there was a breakout. In fact, let me just adopt this a little. So there was a breakout happening last week. Out of this channel here, this down channel or trending channel on the downside here, back above 11,000 points, and then we saw a quite big acceleration and a strong intraday trend, which happened here over over the whole day on Friday, and pushed us as high as 11,250 around. And there probably is the question now, okay, what happened there? And in fact, in my case, the question is this a sustainable move? And I'm not really sure about this. So it could be, or it could become a sustainable move if the ECB comes out in a dovish way, as I expect her to come out after the comments from Mario Draghi last week in Strasbourg. He had a speech there in front of the European Parliament and pointed to to a weaker than expected economy in the EU. And there's also voices rising right now and being concerned about the developments here in Germany and the overall economic situation, and seeing at least at the horizon some signs of a potential recession here, which is very interesting in regards to the current Brexit negotiations. So in my opinion, Theresa May has a very good chance to get a deal today, or probably over the last days. She already got her deal. After her crushing defeat here. 1 second. Okay. After her crushing defeat last week on Tuesday with her a Brexit deal, which didn't come as a surprise. And so the thing now is that some probably might have wondered, why was there such a positive reaction, especially in pound sterling? So why did we just push as high as 130 here and didn't trade significantly lower after that? And I think the main reason for that is that here the EU is to be expected, or should be expected, to make some concessions towards the UK in regards to the current economic developments we see here in Germany, especially, and knowing that Germany or that Great Britain is the 4th largest trading partner of Germany. So with this in mind, chances are really high that there will be concessions. But nevertheless, the comments from Draghi are still out there in front of the EU Parliament, and that means that we have a good chance to get to see a quite dovish ECB next Thursday. And with this in mind, I think chances are good that this breakout here out of this channel and back above 11,000 points in the DAX has a good chance to be sustainable, and probably we get to see a push higher then over the next days to come. Nevertheless, I'm not sure whether the current level is so attractive. When looking at the hourly chart, I think it would be better, or let's say more attractive, it's not probably better, but more attractive if we get to see a pullback to the breakout region here to 10,970 to 11,000 points, and then try to position ourselves long against this region. So if this pullback happens over the next days and before Thursday, I go for, well, I consider this, let's put it that way, I consider this region here, 10,970 to 11,000 points, a very attractive region to go long against. And then with the dovish ECB, that we then find a trigger which will probably push us higher from here. So it's a very, very interesting region. In fact, as you can see here, we have seen several attempts to break above that level. And finally, on last Friday, we succeeded then. And so based on this fact, that was a strong resistance zone, and now it's a strong support region. And against this, long engagements are definitely to be favored. Now, the question is nevertheless, what happened last Friday? So when looking at last Friday, it was a small expiration at the Eurex. So there are options traded on the future DAX here in Germany, and every month on the third Friday, there's a small expiration. And on the website from the Eurex, you can find or get an idea on the open interest here of options being held by bigger market participants. And when looking at this data, we could definitely and clearly see that there was a high interest of holding the DAX below 11,000 points till 1 p.m. German time on last Friday. And when we started the day, when we started Friday, when we started trading, we already opened slightly above 11,000 points, and there was never enough supply delivered which could push us back below 11,000 points. And that was a moment when market participants who still had, in this case, short exposure, had to hedge this exposure and had to buy. Now, we found a quite, let's say, thin market environment, and then there was steady demand which pushed the DAX higher and higher and higher. And at the end, we saw something like a domino effect, which just accelerated. And at the end of the day, and also thanks to the US equity markets then in the afternoon, the DAX was capable of pushing up to 11,250, 11,300 points. And now we come back to the sustainability. Such a hedging induced push higher is usually not a sustainable move in my opinion, but it's a classic short squeeze in this case. So it's no fundamental driver behind this, no technical reason, or technical reason to some extent, yes, but you get what I say. So there's no real sustainability behind this move. And that's one of the reasons why today's drift lower due to the bank holiday in the US is something which could have been expected, and also which probably will result in further pushes on the downside in the days to come, probably especially tomorrow. I wouldn't be surprised to see the DAX till the ECB on Thursday to correct some of those gains from last Friday, since again, I don't consider it to be a sustainable move. And finally, let's probably have a look here then on the current performance in the DAX. So you can trade the DAX in a very similar way as I presented a setup for EURJPY here with a different range in this case. So the range in the DAX is then 8 a.m. German time till 9:05 a.m. German time. And so here, this is the candle to watch. 1 second. It's 9. Yes, there we have it. So this is then the low. Am I right? Oh no, I'm sorry. It's no. We have to it's 9 till 10:05 in this aggregation here. So this is very important. Yeah, and then therefore we go from here. And what I usually do is I consider this blue line here. So the exponential moving average 50 is it in this case on a 5-minute time frame. I consider this to be a really nice trend filter and trend indicator for the intraday price action. So what I usually say is I make things easy. I say we are intraday short as long as we trade below this EMA 50 in this case. So probably it's better to have these two lines here in red than I can say the blue line. It's probably better. So, and so that said, I would say we broke out on the downside, and if we do not make it above the EMA 50 here, there's a good chance that today already first step is made towards bringing back the DAX towards the breakout region of last Friday, 10,970 to 11,000 points. Nevertheless, consider this region to be an attractive potential long trigger, and the DAX short-term being bullish as long as we trade above 10,800 points in this case. And yeah, so in fact, that's it from my end. We could probably also have a look here at gold if someone is interested. Yeah, probably it's worth it to give it at least a small look here. There was something interesting happening last Friday, and when the US dollar pushed higher. Usually there's a negative, or not usually, but it was also on Friday the case. There's a negative correlation between gold and the US dollar. And so when the US dollar gained some momentum, gold lost and pulled back quite aggressively against 1,300 USD here on the upside. Nevertheless, as you can see, we are now trading in a region where, based on this trend line here, long engagements could be taken into account. But also, when going down to a 4-hour chart, I consider gold to be long as we trade above 1,275 to 1,277 USD per ounce. And in this context, I think we also should take the following into account. We are still in a very, very positive, bullish environment for gold. So, in fact, till the 5th of February, from the 14th onwards, so last week Monday, between the 14th of January till the 5th of February, we have over the last 20 years seen 15 years of gains, or 75% of the cases. We were stronger. I'm trading higher than within this time span, and so with this in mind, and knowing, thanks to the ongoing U.S. shutdown here in the U.S., and also that the situation stays tense in terms of trade war between the US and China, and not being really positive about the US dollar, knowing about the negative correlation between US dollar and gold, I consider gold still to be attractive for short-term long engagements and at least a short stint back above 1,300 USD per ounce. Not necessarily today, sure, but over the next two and a half weeks probably, I definitely favor long engagements. And currently the region here, and as long as we trade above 275 to 77 here, is a region where gold could be interesting from a long perspective, in my opinion. Yeah, and that's it from my end.
Thanks for today to Jens Klatz. Tomorrow another day, another day trader. So if you like our series, same time, same place tomorrow again. And if you like to see and watch that again in a couple of hours, it will be available in our YouTube channel. Just go to youtube.com/AdmiralMarketsFX. Greetings from Berlin office all the time. Good trades. See you. Bye-bye.